If you own stock in a company that's expanded heavily into China, it's being killed right now. That's become a serious problem for the market, and I don't see it getting better anytime soon. We just don't seem to want to acknowledge the sea change. We know that there are many pernicious forces working against the bulls right now. We have the great multiple contraction that's always bringing down growth stocks right when a rate cut is about to occur. As I said at the top of the show, that's the moment when stocks of companies that don't particularly benefit from rate cuts suddenly go out of style. Think NVIDIA. We have companies that are missing their quarters badly as we discover that their clientele is more on the ropes than anyone we thought. Think retail away from TJX, Costco, and Walmart. And we have companies that make data centers so necessary for the artificial intelligence revolution, or the companies that allow the electric grid to handle all this new power-hungry infrastructure. These are all for sale. But none are as dangerous as companies that rely on China for growth. Each day, we find companies that have sprung a leak in China that we thought would have been plugged by now. We've discovered that the Chinese consumer is trading down when it comes to the goods that Procter & Gamble makes. If Procter hadn't gone so all in China, I think it would have made the quarter, and its stock would have avoided today's nearly 5% sell-off. It's a fantastic company. I think the stock will come back. We sold some Procter 166 for the Travel Trust, and although we definitely don't run a hedge fund, we'd like to get back and buy that stock, but it could be restricted for some time. Things get restricted whenever I mention the company on air. If Merck hadn't run afoul of what looks to be the Chinese anti-corruption cops, I think its shareholders would have been spared today's incredible 10% skewering. Although I would probably still be down. It probably would be down still because of the rotation, because it doesn't benefit from rate cuts. And I can tell you, it didn't do anything wrong in China. So what's wrong with the companies that do business in the PRC? When you look at China, there's a lethal combination of a government that doesn't like America or American businesses and a populace that's seemingly more cash-strapped than any time in this century, even if they like our country. That's how Estee Lauder can completely implode, thanks to Chinese weakness. Even as CEO Fabrizio Freda, at one time the cosmetic Houdini, can't seem to extricate his company from the PRC's clutches. Casinos that are anywhere near China, forget about it. Nike, they're pricing themselves out of China. Starbucks, their same-store sales were down 14% in China, which is their second biggest market. Horrendous decline, hopefully being made up by other areas around the globe. China's so darn complicated. At one time, their government was so business-friendly that Western companies thought it was insane not to go there. But their government took advantage of us on trade, and ever since the Trump administration, we've been fighting them in a trade war. As Gina Raimondo, the Commerce Secretary, made clear on our show last Thursday, the relations between our two countries are so strained that we have no choice except to protect Taiwan while we build our own semiconductor foundries here, something that antagonizes the Chinese to no end. Maybe one day our companies will simply throw in the towel or take some big charges like Heineken did yesterday when it wrote down the stake it had in a Chinese brewery, taking a $949 million hit. Tough pill to swallow. Nevertheless, Heineken owned up to the disaster that is China. And they're a Dutch company, for heaven's sake. Their government's not involved in the new Cold War. Unfortunately, American companies just keep saying, oh, it'll get better, it'll get better, it'll get better. Where do they get that confidence? I have no idea. In fact, if you want one more reason why the smaller capitalization stocks are doing well, it's because, for the most part, they have nothing to do with China. Therefore, they have nothing to apologize for and nothing to write off. Still one more great reason why they can withstand the selling pressure while they await the rate cuts that will soon be upon us. I like to say there's always a bull market somewhere, and I promise to try to find it just for you right here on Mad Money. I'm Jim Cramer. See you tomorrow.